Hello and welcome to NewsClick. I'm Paranjoy Guha Thakurta, and with me here in the studio I have independent analyst Hemindra Hazari. Mr. Hemindra Hazari is a very astute and very close observer of the banking sector in India, in particular private banks. He's taken on the promoters and he's written critical articles about these banks. And not too many people are willing to air his opinion on the subject. These banks are not just influential, they are big advertisers in media outlets. In this episode, we look at the Kotak Mahindra Bank and the Kotak Group headed by Mr. Uday Kotak, and a very, very unusual tussle that this bank and this group is having with the country's central bank and apex monetary authority, the Reserve Bank of India. Thank you, Hemindra, once again for being here with us. On the 10th of December 2018, in what many believe was an unprecedented act, the Kotak Mahindra Bank, headed by Mr. Uday Kotak, filed a writ petition in the High Court at Mumbai against the Reserve Bank of India. This has never happened before, and the writ prayed for permission to include the preference capital, which is, as you say, essentially a debt instrument, as part of the paid up capital of the bank, in order to ensure that the stake of the promoters, which is essentially Mr. Uday Kotak and his associates, to below 20%, to 19.7%. And this, the Reserve Bank of India's directive is such that the promoter stake in the bank has to come down below 20% by the end of 2018. That year has gone by, and I'd like you to first apprise us, what is the current status of this case?
See, the current status is the High Court in Bombay disallowed his stay that he pleaded for, but have taken it up for hearing. Now, when it came up for hearing in, I think, the second or the first week of January, the Reserve Bank of India lawyer argued for a further extended time to reply back to the Kotak writ. And I think a date has been given sometime in March. So that is where the current case stands. But mind you, this does not mean that the RBI cannot take action, according to me, because now Kotak Mahindra Bank is in violation of the RBI norm. And because the court did not give a stay, in my opinion, the Reserve Bank of India should have gone ahead and penalized Kotak Mahindra Bank straight away.
Mr. Uday Kotak, who heads the Kotak Mahindra Bank, had been given special regulatory relaxation by the Reserve Bank of India. There was a fairly lengthy time frame provided to the bank to bring down the stake of the promoters, and this was not given to other banks, private banks that were promoted by individual promoters. Kindly explain this in simple language, please.
See, what happened was when Kotak was given the banking license, at that time the RBI stipulation was that the promoters had to hold a minimum 49%. So that was a minimum 49%. Subsequently, we had the Global Trust Bank fiasco, where the Reserve Bank then reconsidered, looking at the way the promoter of Global Trust Bank, Mr. Ramesh Gailey, had conducted himself. And they came to a conclusion that promoters' holding should be brought down and diversified shareholding should be encouraged in banks. Now, when they started doing that and telling the banks to bring down their minimum shareholding to 15, first they said 10% and then they relaxed it to 15%. Uday Kotak's contention was that since you gave me the license and you told me minimum 49%, it is engraved in stone really. And therefore, the RBI has no right to relax that or to modify that. I have a fundamental, disagreement with that view.
Okay, but wait. When Mr. Kotak realized that the Reserve Bank of India was not going to relent in further relaxation of the deadline, which was the 31st of December, he moved court. But before that, the bank had issued preference shares. This preference shares was aimed at lowering the promoter's stake in the paid up capital. Now, you're saying the regulator was not informed. No, but according to Mr. Kotak, that he can do it, and he's challenged it under section 12 and 12B of the Banking Regulation Act of 1949, and according to that particular section, those sections, the Reserve Bank of India, according to Mr. Kotak, is not empowered to issue directions to banks to reduce promoter shareholding or otherwise contemplate reduction of shareholding of any person in a bank.
Now, that will be contested in the court, and we shall see how the court reacts. But the RBI's moot point, which we now know because of the documents that Kotak Mahindra Bank itself filed in the court, make it very clear that there is correspondence from the beginning of 2018 where the RBI is informing the bank to please let them know what is their plan of action to reduce the promoter's stake. And in none of the correspondence does Kotak Mahindra Bank inform the Reserve Bank of India that it plans to issue preference capital, which is a debt instrument, so as to reduce the promoter's stake. And that is why the Reserve Bank of India got so upset with the Kotak Mahindra Bank.
In fact, the Reserve Bank of India says that you had assured us you would keep us apprised of, the changes in the capital structure, and according to the Reserve Bank of India, they've taken serious exception to what they describe as willful non-disclosure. Now, tell me, all this is in the public domain, this exchange of correspondence?
It is in the public domain because of Kotak Mahindra's writ petition,
which has gone to
where
court.
all this private correspondence between the regulator and the regulated for the first time and now is in the public domain.
Okay. Now, according to the RBI's disclosure requirements, only the penalty is disclosed to the bank and not the show cause notice. So, the point is, how come all this information is now available everywhere?
No, it is available everywhere because Kotak Mahindra Bank, to boost its case, put all this correspondence in its writ petition. And now, because of media publicizing it, because they're able to get their hands on that copy, the public has become aware of the entire correspondence, which normally we never come to know. Now, we never come to know what was the basis of the show cause notice that the Reserve Bank of India had given. We did not even know that the Reserve Bank of India had issued Kotak Mahindra Bank a show cause notice until this writ was filed.
Mr. Hemindra Hazari, you have argued that if the promoter's stake in Kotak Mahindra Bank is lowered, it would have very, very important implications for the ownership and control of the group as a whole, which includes various companies, not just Kotak Mahindra Bank, but Kotak Securities, Kotak Mahindra Capital, KM Prime, etc., etc. And what you pointed out in your article written for The Wire, which was published on the last day of the previous calendar year, the 31st of December, that Kotak Mahindra Bank sits at the pinnacle of a structure which is not unusual, and it's a majority shareholder in all these other companies like Kotak Prime, Kotak Securities, Kotak Capital, Kotak Life Insurance, Kotak Asset Management, and in all these subsidiaries, the group is really owning 100% of the shareholding. And the structure was devised to capture the valuation of all these group companies into the company at the top, the apex company, which is the bank, which was a sole listed entity in the group. Now, the point is, why should such a structure be frowned on or frowned upon by the regulatory authority, the Reserve Bank of India? I mean, so what if the risk of the entire group falls on the unsecured bank depositors in the parent bank, in this case, Kotak Mahindra Bank? And if Mr. Uday Kotak's stake come down to 20% and then to 15% by the March 2020, how does it matter? I mean, he can control the entire group even by having 15% or less than 15% of the equity of the bank.
Okay, firstly, let's tackle your question of why the bank depositors. Now, when you said that this is normal for a group company, for a parent holding company, that may be the case for a non-bank or for a non-financial company. But when an entity is highly leveraged, as a bank is normally, and that leverage is unsecured depositors, which entails small, individual savings. Now, what happens is, if you have an insurance company as a subsidiary, if you have a securities arm, if you have some commodity trading arm, each of those companies has its own risk. Now, when you have the parent company, obviously the parent will be the final standby for any risk which surfaces in any of its subsidiaries. But since in this case the parent company is a bank, and the bank has unsecured depositors, as well as that the debt to equity in a bank, minimum is 8 or 10:1. That means even if the promoter is a 100% equity shareholder in the bank, actually he remains a minority stakeholder, because the depositor's money is many times the shareholder's money. So why should the unsecured depositor be exposed to certain risks in certain other companies which may not even be under the regulation of the Reserve Bank of India, for example? For example, the insurance subsidiary would be under the regulation of IRDA. The securities arm of Kotak, which is Kotak Securities,
would come under the Securities and Exchange Board.
Exactly. So certain risks
Board
which
of
may
India,
come
SEBI.
there, which ultimately, if things go wrong, will ultimately fall on the bank depositor, and RBI may not know what's going on in those companies at all. So from a fundamental angle, in my opinion, the regulator should never have allowed, that is the banking regulator, should never have allowed such a structure to be implemented.
No, you're saying in the case of Mr. Ramesh Jelly and the Global Trust Bank, just because one bank did badly and collapsed, why should all similar banks with similar control and ownership structures have to suffer the same fate? After all, Mr. Uday Kotak has a certain reputation, he's held in very high esteem, and we'll talk about the SEBI appointed Committee on Corporate Governance.
Okay, let me again this point. I hear this argument very often, and even I, at some point in time earlier, held that view. But I would just like to point out that in the DLF IPO, SEBI had conducted an investigation, and in that they found that numerous subsidiaries, this is all documented in the SEBI report, that at the time of the IPO, a lot of the subsidiaries of DLF were not disclosed as subsidiaries because Kotak Mahindra Bank had financed some of the spouses of the key managerial personnel of DLF, who were
That's a real estate group based in Delhi, headed by Mr. K.P. Singh, formerly known as Delhi Land and Finance.
Exactly.
One of the biggest
so the transactions
real estate groups in the
reveal
country, yes.
that Kotak Mahindra Bank financed these spouses who financed the spouses of the key management
senior
personnel.
executives of the group.
And they transferred the shareholding to individuals who were linked to these people. And because of that transaction, they no longer became subsidiaries of DLF. And mind you, it was lead managed by the Kotak Mahindra Investment Bank. Now, if this is how a bank conducts itself, and mind you, whenever you see such instances, normally they attribute it to rogue employees. But in my experience, it is very rarely it can be rogue employees.
You're saying it's done with the full knowledge and consent of the top management.
And normally that is the way it is done.
All right.
So this whole notion that I very often hear, and which even, mind you, I also had that he's a man of very high reputation, because if he was a man of such high reputation, he should have taken very stringent action once the SEBI report came out.
All right.
But I found that no senior executive of the Kotak Mahindra Bank was ever removed, nothing was publicized, which means nothing was done. Again, I had sent them a questionnaire which they declined to respond. They just, whenever you send
No, 1 minute. This article, you have, in a sense, changed the article because there were incorrect references made to Section 46(1)(a) of the Banking Regulation Act, and you suggested that included imprisonment, but it's actually no imprisonment is involved, it's only monetary penalties. And it's a kind of apology of sorts. where you acknowledge that there can be no imprisonment, but at best penalties, monetary penalties.
Now, let me just give you a little background here. Now, prior to the show cause notice being issued, when the Reserve Bank of India communicated to the Kotak Mahindra Bank that is disallowing this preference capital as a means to reduce promoter stakeholding, there's a very critical sentence written. This letter was written by the Executive Director of the Reserve Bank of India, where it admonishes the bank and it says this was willful non-disclosure of information to the regulator. Now, that's a very key phrase, because according to the Banking Regulation Act, willful non-disclosure of information to the regulator can be, the fine can be imprisonment. That is why 46(1) is applicable, because the key word here is willful. Because once the RBI, the regulator, acknowledges that the bank is willfully non-disclosing information, then the penalty by the law of the land in the Banking Regulation Act can be imprisonment. In this case, however, although the RBI ED has used the phrase willful non-disclosure, when it came to the show cause notice, they did not apply 46(1). They applied the lesser provision where the penalties are monetary fines,
which is 46(4).
Exactly.
And 46, yeah, all right. Okay. Mr. Hazari, you have been very, very critical of Mr. Uday Kotak. You have said that in his avatar as the head of a committee on corporate governance appointed by the Securities and Exchange Board of India, in his own report, he has eloquently argued, and you quote him, while companies in general comply with the regulatory minimum, the committee encourages boards and managements to view disclosure and transparency as a means to build trust with stakeholders and to proactively disclose material information that may impact decision-making variables. Now, you have argued, I do not understand how you come to the conclusion that Mr. Uday Kotak is arguing that as a promoter CEO, that he's arguing for greater than the minimum transparency. And you have said, and I quote you, strangely for a bank with a market capitalization of 2,36,386 crore, it adopts what you call reckless action of filing a strongly worded writ petition against the banking regulator, and we'll talk about the media after this. I want you to explain why you've used such strong and harsh language against a person who is often lauded and applauded and held up as a person who is not only a well-known and a very reputable and a very credible banker, but a person who's also been appointed by the financial markets regulator, SEBI, to head a panel on corporate governance, on good corporate governance.
Okay, now let's talk about the disclosure part. Now, as per the Reserve Bank of India disclosure norms, they state that you don't have to disclose when the regulator issues a show cause notice, but only when a penalty is issued, then you have to disclose it, which is the minimum requirement, which Kotak Mahindra Bank has complied with. However, I am arguing that since Mr. Uday Kotak was chairman of this corporate governance report, and since he has argued for more than the minimum disclosure requirements on certain key variables, in my opinion, when the regulator issues a show cause notice to a bank, and before it issues a show cause notice, it accuses the bank of willful non-disclosure of information, where the fine is imprisonment if that particular section is incorporated, then to me that's a very critical information which shareholders and stakeholders, namely depositors, should be aware of. And if especially if this founder CEO of the bank has made this recommendation in a corporate governance report, then in my opinion, in his own bank, he should have voluntarily disclosed that information. Because according to me, that's extremely material information. When the regulator has given you such language in a communication with the bank.
May I interrupt you briefly? You use very strong language in your article. You are saying Mr. Uday Kotak's decision to go to court was is an ill-advised gamble, and he set on what you describe as a headlong collision course with the Reserve Bank of India. Aren't you trying to influence the course of justice? Aren't you trying to, by writing these kinds of articles, by expressing your opinion, you're also trying to influence what the court may or may not decide?
See, if I was occupying a seat in government, then obviously what you say could be correct. But I am, as my disclosure very clearly states, I am an independent analyst. And as an independent analyst, I'm entitled to my views as long as I support what I say with certain data and a certain logic. Obviously, in a democracy, if the right of speech, I don't expect everyone to believe.
Article 19(1)(a) of the Constitution.
Exactly. I don't expect everyone to believe. And I would hope that there is more debate, discussion on the subject. But I believe as an independent commentator, I'm entitled to my views.
All right. Anything else you'd like to say before I come to the last question on the media?
On Kotak Mahindra
Yes,
Bank. Yeah, again, now why do I think it is reckless? Because normally in any jurisdiction in the world, banks are extremely reluctant to take on the banking regulator to court, because normally courts side with the banking regulator, because this is a very key operational matter for banks. They're not, there's nothing outside the banking industry in this particular case. So normally banks do not take the regulator to court.
So let's wait and watch and see what happens. What does the High Court in Mumbai, what it decides, and whether whichever party the bank decides in favor of or against, whether that party, whether it be the Reserve Bank of India or Kotak Mahindra Bank, challenges that decision of the High Court at a higher level, which is the Supreme Court.
Now again, mind you, why do I use the word reckless? Because end of the day, Kotak has 30% shares in the bank. He's still a minority. He's the largest single shareholder, but he's still the minority shareholder.
If you put everybody else on the other side, so
exactly.
to say.
Now, when
that
the
RBI
RBI
never happens.
But when the RBI, if the RBI were to penalize the bank because of his actions, everyone would suffer just because the promoter wants to protect his stake. So everyone may lose out as a result of a promoter just wanting to protect his stake in the bank.
You've pointed out that other than Bloomberg Quint and The Wire, very few, the media outlets have hardly reported on the details of what has been disclosed in the correspondence between the Reserve Bank of India and Kotak Mahindra Bank, which is part of the documents which have been submitted to court. So other than merely reporting that the bank has filed a writ petition, etc., the business media, or much of the business media, has not commented, or, to use your language, sat out as mere spectators. And even when television channels like CNBC, Television 18 have conducted panel discussions, such is Mr. Uday Kotak's stature. I quote your article, that not a single panelist was willing to publicly reprimand him and the bank. Instead, they gave excuses justifying the bank's conduct. I quote you, I unquote. Is this because this bank is a big advertiser? Could that be a reason, or is there any?
It's not just that he's a big advertiser. I think you have to appreciate that in the private sector banks, a lot of these banks are part of a huge financial conglomerate, in the sense that if you look at the structure of HDFC, ICICI, Kotak, you will find that not only do they have banks, they are actually controlling vast pools of public money. One is, because of a bank, you have depositors. Two is, your life insurance arms are taking policy money from, again, individuals. So that's also a huge pool. If you look at the AUMs, the assets under management they control. Then if you look at the mutual funds that they also have, see, all these three have all these huge pools of money which are really public money. And therefore, their advertising budgets are huge from various different arms of the group. And in particular of Mr. Uday Kotak, because the Kotak family has a controlling or probably majority ownership in Business Standard, naturally press people who cover this are reluctant to criticize him, because that will be closing a door of future employment if it were to ever arise.
Okay, Mr. Hazari, at least you know that Business Standard won't be employing you or asking perhaps you to write.
I don't think even Kotak Mahindra Bank may employ me also as an analyst.
Thank you anyway for giving us your time. And surely your views are bound to be contentious and contested, and there would be other points of view. But thank you very much for coming.
I would just like to add, that's the whole purpose of living in a democracy, that you must have all points of view to be aired.
All right. Thank you very much once again. You just heard and watched Hemindra Hazari, independent analyst of India's banking sector, talking about the unprecedented, very unusual tussle between Kotak Mahindra Bank and the Reserve Bank of India, India's banking regulator. This concludes the third episode in a series of discussions, conversations I've been having with Mr. Hazari. The first was on the ICICI Bank. The second was on the IL and FS Group, the Infrastructure Leasing and Financial Services Group. This one was on Kotak Mahindra Bank. And the fourth one would be on Yes Bank. Keep watching NewsClick. Thank you for being with us.